All right, for this week's analysis, God has given us more information and it's time for us to use it to our advantage. So let's start on the weekly time frame. All right, on the weekly time frame, we have quite interesting information. So last week's closing was bearish, but with a pullback. And we all know that with gold, big pullbacks mean a reversal. As you can see from our left, we have had big pullbacks right here, right here, right here, and now we have this one. The only problem with this one is if price wanted to go higher, we should have seen price going higher on this bullish candle, but price didn't go higher. So what can that mean? Why didn't price go higher? Why did it give us this bearish candle? And then why did it give us this pullback? So we have 3 questions that we need answered. So now we could potentially say this range is still in play. Because if this range wasn't still in play, then we should have seen price at least closing somewhere down here without this pullback, or price could have gone higher and closed above here, but it didn't. It stayed within the range. So what do we need? We need to put our high. So that's our potential high. Let's just say weekly high, right? And then we need to see where we can put our low on the lower time frames. For now, we need to put this low. This is an important low, all right? That is an important low. Why is it important? This candle tried going lower, but it put back as well. This candle tried going lower, but it put back as well. So that becomes a very important low. So now, as we are trading, these are our 2 most important areas. So those are the areas that we have to watch closely. But there is a third one, a middle one, that we need to know about, that we need to see. In a range, what I've noticed, there's always 3 important ones, the high and the low, and the one that's in the middle. All right, so now that we have our important zones, let's move on to the daily time frame. We can't really talk about trend right now because we are in a very big range. If you look at the weekly time frame, we have 2, 4, 5 weeks in this range. So for trend, we can't really say much right now because price could go either way, and we are expecting it to go either way. Now let's move on to the daily time frame. In the daily time frame, that is where things get a little bit more interesting. All right. So on the daily time frame, we do have a zone around this area. Let me put the line around this area. Now, we need to understand something about this area. All right. So if we look to our left, right, we are being guided by that area. Right, you see rejections, rejection, right? That's how we know that there is a zone there, right? However, price went on and broke below, and then it came back, it broke above, right? But at least when it went above, price at least tried and retested, right? So we can move our zone all the way and we can put it right here. Because now this is the action that we have to use right now. We can't be using this information to our left because price, it broke through, it went down, it went above. So now this becomes invalid to us, and this information, the one that we're being given at the moment, is the one that's now valid to us at the moment. So let's move on to the daily time frame. I mean to the 4-hour time frame. On the 4-hour time frame, this is where things get interesting. We still need to move our zone. Can even just move it to these lines right here, these weeks. We know that we can extend it over here. All right, for other people's sake, let's do that. All right, on the 4-hour time frame, this is where things get interesting. So could we call this an impulse, a retracement for price to go lower? All right, that's one potential. Because you can see that when price went down, it went down. It didn't play around. But as price is going up, we have way too many this and that that's going on. So could this be the correction that we have right here? Right? And then this is the impulse correction for price to go lower. All right, that's our one possibility. We can even count our correction impulses. All right, our correction impulses, we have 1, right? We have 2, and we have 3. That's enough. For a correction, we only need 3 impulses. That's very much enough. So if this is a correction, then we now know the price is a high chance of going down. All right, so that's one theory. Now, adding to that theory, if we do look on the weekly time frame, let's go on the weekly time frame. On the weekly time frame, we do have a long wick at the bottom that needs to be filled, as you can see, from here to here. Now, if price doesn't want to go higher, it has all the possibility of completing a wick fill over here. It can actually complete a wick fill and then find a place or our order block to reject for it to go higher. But right now, we do have a possibility of a wick fill on the weekly time frame. If we have a possibility of a wick fill on the weekly time frame, that means on our 4-hour time frame, our theory becomes very much likely as an impulse correction for another impulse, giving us the wick fill, and then we will see what price decides to do at the bottom. All right, whether it will continue going down or if it will respect the range and possibly come back all the way up. All right, so now those are all our possibilities. So for today, we can go on the 1-hour time frame. On the 1-hour time frame, all right, this is where things are even more interesting. On the 1-hour time frame, what I don't like about it is because this looks like an impulse. And this looks like a correction. Before you know it, we could get another impulse. All right. You can see impulse, correction, impulse. That's 3, 4. We could get another 5. Could get a 5 that ends here, or a 5 that gives us a stop loss hand. And then we can get that drop. All right, so that's one thing that we can actually look out for. This looks way too much of like an impulse, and this looks way too much like a correction, and that is very confusing to what we are looking for. But for the meantime, we can keep that in mind and see what price does today, what information it does today. For now, we know that price isn't doing much. This is not the price action that you want to be trading in. As you can see, price keeps coming back to this high. So now we know we have a high that we're looking out for today. If price keeps coming back to up to that high, at the moment, price came back for the retest when the 4-hour candle opened, it rejected. Now it's all the way down. So now if this candle can close bearish, you can trade the target over here. That is your first target, because for price to go lower, you actually need to see price closing below this area right here. Remember, this is an important zone. Price needs to break to go lower. All right. So you can watch it break, and then you can enter on retest, because it can actually break and come all the way down here, right? So when it comes for retest, you can then enter for that. But if you don't want to do that, when this candle closes bearish, if it does close bearish, you can sell to your first target right there and your second target right here. All right. If this candle doesn't close bearish, then you just need to wait. You just need to wait for a candle that will close bearish below right here, right? With your targets, first target and your second target. However, like I keep on saying, even by just looking at it, this looks way too much like an impulse. This price action we have right here looks way too much like an impulse. But since it's the beginning of a new week, maybe they have new targets set in. So we need to see what price is doing around this area. For today, you need to watch out this high. All right. So let's maybe highlight that high. Let's highlight this high right here. That's our daily high. That's only for today. So at the end of the day, you need to reevaluate this daily high to see if it's still holding or if it's not holding. But for now, if price can break the lower price is at, we should see it continue to our targets. All right. So just be careful. Both views are very much possible, the buys and the sells. For buying, we all know we need to wait for price to break above our daily high. All right. For buys. All right. And then let's put a lower price is it. That's for short-term sales. All right. You need to understand when some areas are being broken for long-term sales or long-term buys, and some areas get broken for short-term trades only. All right. You can't expect every area that price breaks to give you that much of a big trade. Sometimes price is only breaking to give you a short-term sell or a short-term buy, and sometimes price is breaking to give you a long-term sell or a long-term buy. As I have highlighted here, if price breaks the lower price is at right here, that's short-term sell. If it breaks this high, your first target is right here, right? And then your second target is right here. For price to give you long-term buys, it has to break above here. All right. So for other people, let's highlight that. For long-term buys. All right. Now, we should all remember to be patient. If this candle doesn't close bearish, I would trade it for a weak fill. So you open a trade, or you can watch it to see if price will come to this low, right? You buy and your target is at the high. You're not expecting much, you're only trading for a week fill. All right, that's how you trade a week fill trade. The same thing with this candle, this bearish candle. Ooh. All right, it might not have been the best time to trade it, but it's a good example. In our example, we're saying this candle gave us a weak fill right here. So you could have actually opened a sell with your targets right here. Of course, if you had a stop loss above here, that week would have taken you out. So you have your pros and cons. And for this one, let's say the bearish candle closed the bullish like this. So you'll technically be opening your buys and your target right here. And if you want, you can put your stop loss right here. That's if it does that. We don't know how it's going to close yet. You have to wait for it to close. All right, that's it for now. Let's wait for more information.